Well, and sticking with the theme of the economy here, we have reached the new year of 2023. The investment markets took a beating last year, with the average portfolio losing anywhere between 10 and 30%, depending on your risk tolerance. Now, over the last 75 years, following a year that had 10% losses or more, 85% of the time, the market was up the following year. So, is it time to rebalance and look to the future for gains? That's tonight's All New Money Talks. Should you be rebalancing your portfolio? Well, you might choose to rebalance according to a set time frame, like once a year at tax time, or whenever your target asset allocation strays by a certain percentage, such as 5 or 10%. Warren Buffett uses the 70-30 rule, meaning he keeps 70% of investment capital allocated in stocks and 30% to fixed income securities, primarily bonds.
The mix of investments you hold is referred to as your asset allocation. After a volatile year like the one we just had, it's a good idea to check your asset mix, make sure that the stock percentage you have is what you really want to have going forward. Younger investors tend to have more in stocks for higher growth potential. Older investors might want to have a little bit more in bonds for more stability. So check your asset mix after the volatility and make sure you set it where you need it for your investment goals and your time horizon.
Even though most of our accounts are down right now as they took a real hit in 2022, many still pay dividends and capital gains and will become profitable when we are back into a bull market.
We're all a year closer to our financial goals like retirement or college education. So it's a good idea to look at your portfolio. And if it's for college and a 529 plan, look at that mix. Make sure you have enough stock for growth potential, but enough in bonds and cash for the money that you need to spend for your goals should the stock market drop.
And remember, anytime we sell assets, whether taking profits or losses, we have a business partner in Uncle Sam, and the tax burden is always something to consider.
Nobody likes losing money, but there is actually a silver lining to the investment loss cloud. If you have investments from last year that are worth less than you paid for them, the tax loss harvesting, you can sell that, use that to offset gains, and buy a replacement that's not identical, but a similar type of investment. So that way, when that portion of the market goes back up, your investment recovers, but you can take advantage of that tax loss. Now's a good time to take a look at that.
Okay, and just to wrap this up, the S&P finished down 19.4% for 2022. That's a brutal number that led to the evaporation of, get this, $6.8 trillion. Let's hope for much better results in 2023.